Go. So after that little mishap, thank you for letting me know there's no sound. So I should be sound now. Sound. Good. Yeah, good. Sorry about that. This has been one incredible year, and it's always normal that we had the worst 20 weeks ever. And typically after a catastrophic year, which was last year, worst year in 50 years in the markets, is followed by a good year. But this year is beyond good, and we're going to look at a whole bunch of data points pointing to that as well. We're also going to talk about how, obviously, the SEC tried to carpet bomb crypto. Now it's beginning to look really clear as to why. Again, tinfoil hat, firmly attached. But I'll be talking about the tidal wave of money coming into crypto, and it is staggering. I'll look at a whole bunch of on-chain signs, a couple of charts, talk about a couple of trades, some pair trading stuff, talk about lots more bullish signs, TradFi coming. But there is some bad news. There's some minor news that actually is quite bad, some sentiment news that's bad, some decline in digital asset fund flows as well. And there's some ugly news too, kind of on the macro side. So let's just jump in. And this is Edutainment, and thank you all for being here. And this is the place. Literally, there's more knowledge in every one of these videos than you will find in any 10 other videos anywhere on YouTube. And that's just a simple fact. So subscribe if you want to amplify your intelligence. If you feel you're smart enough, then there's no need to subscribe. So we'll start with the good news today, everybody. And there's a lot of it. First of all, let's talk about what happened to the crypto market the last 7 days in dollars, not in Bitcoin. I normally start with Bitcoin first. But you can see here, it's a big week. You've got Bitcoin and Sol both up exactly 7%. Stacks up 10%. Binance up 5%. Ethereum up 2%. And XRP down 7%. And Cardano down 3.5%. And some other big names there. And let's look at it in Bitcoin terms. You can see here a little bit different. And Bitcoin has been on a rampage. In fact, right now, as we speak, Bitcoin is popping. Let's see. 28,200. $1,300 candle today. And of course, it's running a little bit faster than some of the other names. But there will come a time when they catch up. Everything kind of catches up. And we've been through so many storms lately, but things are so resilient and bouncing back so fast. So let's look at the top 50 last week, the weakest and the strongest. And people are saying, oh, altcoins, people aren't going to touch altcoins. They're still playing with garbage like SHIB, up 7% over the last 7 days. Stacks, of course, up hot because it is kind of regulatory approved, but really the valuation is ridiculous. Aptos is up as well. Again, valuation ridiculous. And the losers, ApeCoin, TON, and XRP. XRP down 9%. I think it was up about 5 or 6% last week. So big moves there. But let's look at what's happening with Bitcoin and the critical 200-week moving average. Boy, we had a beautiful sniping opportunity at $25,000 this week, last week. And look what it did ever since. And this is why you just have to have your levels ready and be ready to deploy and jump in and do it. So this is the Bitcoin, the 200-week moving average. Typically, we bounce above it. We had a long, nasty winter under it, but we just dipped under it for the first time since March. And it didn't stay there very long. And that's a good sign. That's why we look at this. But the actual vertical spike out of it is something to behold. And what's going on out there? So let's look at a big thank you to the tree. Thank you to, let's look at Bitcoin bounce on exchanges. I think this is part of why I believe there is kind of like a nuclear arms race to get on top of crypto fast. Because, and I've been talking about supply crunch for a long time, but this is the Bitcoin bounce on exchange. And you can see here, we are again at a large low. It has dipped and it's gone straight down. The question is, will this continue? I know there's been a lot of nervousness about Coinbase and Binance, etc., which accelerated people taking their crypto coins off exchanges, but it is pretty extreme. And even more extreme is Bitcoin is becoming very illiquid very fast. Let me explain that in some numbers, a little chart here from Glassnode. The illiquid supply chain metric measures the number of coins held by illiquid wallets. These are folks that do not sell. And the total held by illiquid entities has jumped to a record high of 15.2 million Bitcoin. And the rate, this is the most important thing, is the rate of flow into illiquid wallets has turned big time. May 24th, signal a renewed accumulation. And here, basically what this means is we are losing 147,351 Bitcoin a month. That's over $4 billion a month are leaving the market, going into wallets that don't sell. So, well, they might sell at 100,000 or 200,000. We don't know. But this is staggering. This is why I think the big money market players are getting nervous. Let's look at where Bitcoin whales are. Well, they've been busy too. Bitcoin whales have been busy while the crowd watched prices dwindle the past 2 months. Now we're back above 28.2. Now what happened? Well, it's not a coincidence, and I've been talking about these guys as well for a long time. It was the 10K plus who were stacking. Now the wallets holding 1,000 to 10,000 Bitcoin have accumulated a combined 4 billion, nearly 4 billion, since the first week of April. Again, watch what the big players do. That is a big, big stack. And again, the beauty of Bitcoin is it's so darn scarce. It's quite incredible. So let's talk about Ethereum real quick before I get into the tidal wave of money. And you can see here, Ethereum was going vertical after a buy signal at 1640. That was kind of the bottom. And again, it moved in unison with Bitcoin. Since then, wow. And this is despite all the choke point fear and everything else. But what's even more drastic happening with Ethereum on exchanges is as follows. The Ethereum balance on exchange is at a 5-year low. Okay? Crazy, crazy, crazy scarcity. Not only is balance dwindling on exchanges, which makes it more scarce, but everybody's kind of staking it more and more as well. And it's deflationary. So that's one of the things I know Ethereum has so many problems, but this is what I believe counteracts many of those problems. So let's talk about the tidal wave of money coming into the space. Who are the players? How much is involved? And what could it do to prices? Let's start with a reminder why I think they have this kind of sense of urgency about them right now. And a big thank you to Sanjay for sharing this chart. But I do believe the big money knows about the Bitcoin halving, and they want to get in before the big run. Because if you look at this chart here, the 2024 halving will happen April 14th, approximately 2024. After that, we go on a run. In fact, we'll be on a kind of a pre-run. We might take a little bit of a breather in August, which is typical. Maybe September could be kind of flat. After that, running up to Christmas time, it's going to be bonkers. And then running up to the halving, it'll be bonkers again. I believe there's far more education out there right now, which means things will run faster. Things will be front run. Now, according to this little chart in this little green box here, this could put the price between 180 and 220K. Again, it's hopium, not my chart. Way higher than where I expect we could go. But again, look at the supply. It's never been so tight, so scarce. There's never been so much adoption, and it's crazy. So let's look at what's happening. First of all, everybody's been talking about Blackrock last week. I won't spend much time on this, but I will talk about this ETF timeline from K33 Research. And what's interesting about this is how they believe it could take as much as 240 days for Blackrock to be approved. That would take them out to approximately somewhere between January 2024 and March 2024. Notice the coincidence in timing here. I won't walk through on this entire chart. We don't have time for that, but you can pause the video, read it, look at all the detail. The point is, they got to be in before April. Or maybe, considering it's BlackRock and the SEC works for them, maybe it'll get fast-tracked. Some people are even saying it could be approved in a couple of weeks. We'll see. Either way, it's crazy. Now, there's a lot of impact of that as well. We're having other news as well. Fidelity, Schwab, and Citadel, they just launched their crypto-backed exchange with their live offering for both Bitcoin and Ethereum trading. And you're seeing a lot of activity there around these assets too as well that we showed in the charts. Just literally all this news is coming out all at once after the carpet bombing we had from the SEC. Now it's like ancient history. In addition, Deutsche Bank is coming too. $1.4 trillion banking giant files for crypto custody license. So not only do they want to get into the crypto trading business, but they want to hold your crypto. Obviously, not your keys, not your coins. So we learned that the hard way last year. But it's funny, people actually say that. And then they actually ask for your keys too. Craziness. Anywho, Nomura, big Japanese bank, did a cool survey out of their Laser Digital group. And that is their digital asset subsidiary. And it's a huge huge bank, trillion-dollar bank, but it revealed that 96% of professional investors managing 5 trillion are keen to invest in crypto. So it's happening all over the world. Germany, Japan, USA, all the places with big bags of money. Everybody wants to get in. So it's crazy. Let's talk about just some of these names that I rattled off real quick. Threw them in a table with their assets under management for each. Fidelity, 4.5 trillion. Charles Schwab, 7.13 trillion. Citadel, 480 billion. Poor Citadel, looks so small. Deutsche Bank, 1.01 trillion. Blackrock, 10 trillion. And Nomura, 700 billion. Total of all of these guys is $27 trillion. Let's put more perspective on these crazy numbers, because the market cap of Bitcoin is so small and there's so little left. It's just exciting. That's why I urge everybody to stay healthy, because the next 8 years will be fun. Promise you that. So let's look at US retirement assets. Now, what's interesting about this little chart here is the amount, which is huge. So globally, there are about 60 trillion. Sorry, in the US is about, globally there's about 60 trillion in pension funds. I got to get these numbers straight. The US has 40 trillion in retirement assets, and there's over 250 trillion in private retirement savings. Okay, so and also of all of this money, they put about 3% of that into gold. That's about 1.8 trillion. All right, and 20% into alternative assets. Now, crypto has a 1 to 0.12 value to cash ratio currently. And even, this is the critical part, even if half of 1% of the 23% went into crypto, the market would, guess what? Go 15x. And it is shout out to Adam Cochran who put this chart together. I did the 15x piece. But I think, and I'm working on the numbers, but basically we're very, very close. So the math I get is about 14 trillion from that percentage. And given my 21x multiplier would bring the market cap up by 14 trillion on top of the 1 trillion it is right now, which would be 15 trillion, which is a 15x. So Adam Cochran and I use the same multiplier. Again, I'll dig more into these numbers. They're still a bit fresh, but just half, not of all assets, half of alternative assets going into crypto, the crypto market would 15x, and that is stunning. So let's get back to what the crypto market looks like and what these big players are going after. So if we focus on ETF-like products backed by physical Bitcoin already, there's about 650,000 Bitcoin chopped up. It's about, 3% of the total max supply, but we know there's only going to be 14 million Bitcoin. In fact, when I was chatting with Saylor, I think, last year or the year before, I said, is your goal to own 1% of all Bitcoin? Because our whole conversation was around the max amount of Bitcoin would only be 14 million. And he's exactly at that 1% level now with 140,000 Bitcoin, but Grayscale has a lot more. You can see here they got about 630,000, and then the rest are all kind of small. But the thing is, what are these big players looking for? There's rumors swirling around now that Fidelity is trying to cut a deal with Barry Silbert at DCG to get a sweet deal on Grayscale. That'd be cool. And we're seeing the action already happening with the discount. Let's dig into this real quick, because this is all these different pieces of this puzzle tied together inextricably, and we cannot deny that. So there is huge optimism about the prospects of a spot Bitcoin ETF in the US after BlackRock filed for one on the 15th of June. That lit the market up last week, only 5 days ago. But what's happening is, as well, the price of these assets is soaring. ETH and GBTC were both up 13% today. Crazy, crazy move. While Bitcoin went up, for a similar perspective, about 4.75%. So that means if like ETHE, the Grayscale Ethereum Trust, and GBTC, Bitcoin Trust, if that goes up a higher percentage than Bitcoin, that means the discount is falling down. Let's look at, shout out first of all to people that were watching DCA yesterday from William G. Saul. He was watching DCA, and I said yesterday, ETH at 53% discount was ridiculous, and it's worth the flutter. Well, tons of people in Patreon did that, and we did a trade today as well on that, on the pair. So this was the discount yesterday, 52.95% for ETH and 36.63% for GBTC. Not bad. You could have bought a Bitcoin yesterday, saving 10,000 if you did it using GBTC. But of course, I always say pure form always. Hold it and don't be paying 2% to other people. But the discount today, how it radically changed, it fell from 53% to 46.87% in a day. And the GBTC discount fell to 30%. We haven't been that low in a very, very long time, ladies and gentlemen. And again, this model is available within the community as well, if anybody's interested in it. Now let's look at the pair that I've been looking at for quite some time. And today I felt it was time to strike because we hit exactly 2.02 today on the pair. And that is GBTC divided by ETHE, not Ethereum. And that was a perfect moment to strike, hitting that red line, swapping Bitcoin for ETH, which had a near 50% discount at the time. After that trade happened, I don't know, something happened to the price of Ethereum. I hope it wasn't everybody in the community buying, but everybody was jumping into Ethereum because then my theory is, okay, GBTC will be approved for a spot if they get acquired by Fidelity or whatever. Once BlackRock get approved for their spot ETF, others will have to be approved as well as we go forward. They just need to do the same type of thing. And ultimately, my theory is the ETHE will get approved too down the line. So let's talk about market stuff, which is kind of crazy because a lot of people are still out there extremely bearish. People still shorting the market after, so many names going up over 150% this year. Of course, they're all AI plays and big tech names. But this is some history, and I study history intimately, but this is on CNBC Pro. History shows a big market first half leads to a big second half. You remember, I think it was the 4th or 5th of January, I made a video. If the first 5 days of the market are positive, the rest of the month is positive, and the rest of the year is positive. Well, that has been true so far. But now there's another historical theory, and it's this. I call it first half math. And if we had a big start for stocks in the first 6 months of 2023, it's a signal that even bigger things are on the way for the rest of the year. Can you believe that? The stronger the start to the year, the stronger the finish is likely to be. Again, I'm only going back on history back to 1940. Or 1947, I left out World War II because things are a little bit messy during that time. But the second half has averaged an increase of 8%, and that's nearly double the typical 4.2% average for the July through December period. And just data, and this is from 1945, not 1947. Data going back. And historically, again, you can see the numbers here. If we have a bonker first half greater than 10%, the percentage of years gains are 82%, and the average return in the second half is 8%. We'll see if history repeats. It tends to, or it rhymes at the very least. Let's look at the stock market, considering we're talking about the stock market. Here you can see interesting last 7 days. Some green, some real bright green, like NVIDIA, Meta, Tesla. These are the gifts that keep on giving as we go forward. Other names kind of flat. Google down, Amazon down, those big tech names. As I say, they simply aren't growing fast enough compared to the other really disruptive names out there. That's why the stock market realizes that. In addition, let's look at the Bitcoin versus Nasdaq. For the first time this year, Nasdaq smashed it. Obviously, this is over the last 90 days. And it's good to get a rolling perspective of where the markets are between disruptive technology and Bitcoin. I think they're both disruptive, and I like to own both. But here you can see for the first time this year, the QQQ, or Nasdaq, is now winning, up about 18% versus Bitcoin down 4%. That's even after the run today. And that shows you how bad the last 90 days was for Bitcoin. But it's changing fast. And it's funny. Remember the bees, bees go to where the pollen is, they drive it up, and then once they exhaust it, they move on to the next flower. So now we're seeing Bitcoin's time in the sun. So let's talk about Tesla for a second. This has been an incredible year, up 153% year to date. But what's interesting about this chart too, and I think it's up another $3 or $4 in after hours, which is insane after the $3.35 up more in after hours. But you can see here, the green line is the 50-day moving average, and the red is the 200-day. So we are going to get a golden cross, ladies and gentlemen, probably in about a week or even shorter if we keep going vertical. And this has blown everybody away. But when you do your homework, you know it's only a matter of time before the cream floats to the top. There are some names in crypto that haven't quite done that yet, but I'm confident one day they will. It might take another 6 months or a year or 18 months, but there will be a bright future there too. Let's look at crypto having no utility. This is a funny joke, by the way. I'm sarcastic when I say that. But a lot of people, on TV and stuff, like crypto can't be used for anything. It's just fake. It's a scam. Well, tell that to the largely unbanked emerging market population around planet Earth, facing wicked debasement and forced to go through extortionate intermediaries to transfer cash, etc., to their loved ones. Bitcoin and stablecoins are superior money modalities for emerging market users. And perhaps these Western idiots on TV should walk a day in the shoes of other people that are suffering hardship. Nigeria, you can see the adoption rate of crypto, 45%, up from 28% in 2019. Thailand, 44%. Turkey, 40%. All of these countries have terrible inflation. Thailand is not too bad, but the others definitely do. Argentina, 35%. I'm always surprised Argentina is not higher because the people there are beautiful and very smart and everything else, but I don't know why they hold their currency. UAE, 34%. Again, not a big inflation problem there, but it's become a hotbed for crypto. Philippines, 30%. Again, repatriation of money to the Philippines is very important for many. Vietnam, 27%. India, 25%. Singapore and Brazil, 24%, 25%. And the US, only 16% penetrated. That's why I say, who cares about the SEC? It doesn't matter. They'll get rid of that Gensler guy in a couple of months or maximum 16 months from now, and then we'll get back on down to business. But in the meantime, crypto will continue to be adopted by those in need. And I haven't added it up. I meant to, but I forgot. Didn't have time. When you add up the populations of these countries on this list, it is a way over half of the planet, and that is massive. Take that, half of the planet, multiply by those percentages, you get large numbers. I will do that tonight, actually, because now I'm intrigued. So let's talk about, despite the SEC, this is the kind of alt season index. We're back up at 22 from 14. So alts are not dead. Yes, Bitcoin dominance is going up, but alts are by no stretch dead, and we are way better off than we were a week ago. It was at 14, and a week before that it was at 6, and a week before that it was at 4, 6, 14, 22. So alts are not dead despite the SEC. Again, the SEC does not control crypto around the earth that we just discovered. And fear and greed is back up to 49 from 45. So people aren't as terrified anymore. So not bad as well. And Michael Saylor, of course, on the box. It was an interesting point that I just thought I would share. That he said that if AI took over all the computing power on earth, all the smartphones, all the computers and servers at Amazon and Google and Microsoft and Oracle, etc., they still couldn't dent the Bitcoin network. And something to think about as well. Again, the security of this network is second to none. So if you're short on time, we summarize every single video we do in a Substack, and it's about 13 cents an episode if you want hard copies of the slides and all the text, because it's just loaded with alpha, and there's no way you can absorb all of this by listening to me for 30 minutes. Now, switching gears to the bad news, everybody. So this is the miner outflow. It hits a 2-year high, and this refers to the amount of Bitcoins that are sent from mining pool wallets to other addresses. Some are exchanges like Coinbase, some are OTC deals, OTC desks. Others are cold storage wallets, but the miner outflow multiple is a metric that measures the amount of Bitcoins flowing out to miner addresses relative to its historical average. And a high miner outflow indicates a large amount of Bitcoin are being sent from miner addresses. And this typically is a sign of sell pressure. Now, the reason I mention this is we have a lot of bad stuff happening in the market, and the price still goes up. Can you imagine when people are feeling enthusiastic or sentiment is high? It's going to be bonkers. That's why I'm so excited. But the miners are selling to get as much cash as they can, to buy as many rigs as they can, so they can scale up to be ready for the halving. Now, by my rough calculations, if the Bitcoin price by the time the halving is under $50,000, half of the miners will be losing money when they mine with the current exposure to costs and overhead that they have. Half. Think about that. I'll repeat that. If the price of Bitcoin is not like 55,000 approximately, half of all Bitcoin miners will be going out of business fast. All right. So if the price is at 30,000 or 25,000, they're toast because the reward would be so little. Unless, of course, they can make a ton of money in ordinals. That's a separate issue. So that's the mining news. Also, sentiment. And I've been talking about this for years. A lot of people sometimes, if they follow the sentiment, oh, sentiment's bad, I'm going to stay out of the market, that can be the kiss of death. And cryptocurrency trader sentiment has reached its lowest level since C19. I did mention this on a DCA yesterday. Okay, sentiment is in the toilet, especially bad for XRP and Binance and Bitcoin, ETH and Cardano. But what? It just shows you how ridiculous sentiment is. You know, if sentiment is really, really bad, that should be like an automatic buy signal. Because look what happened this week as well. Anyway, that's sentiment news. Also, a little bit of bad news. Digital asset fund flows 8 weeks down. But the good news, only slightly. $5 million versus about $60 million last week. So it is not too bad. It's a tiny little blue speck on that chart, but it's still negative. Therefore, I stuck it in the bad news category. But it's bouncing back nicely. In addition, if you look here, the prior week crash in altcoin prices prompted investors to add positions. Okay, remember, every asset had its price, and we saw inflows of 2.4 million coming into XRP. Cardano as well had an inflow of 600,000, which is big, and Polygon, people are buying that too. I think they saw inflows of about $1 million, but it's not on this in this detail. Other assets were kind of flat. Tron fell by 400,000, Ethereum by 5, Bitcoin flat, let's call it. So it's important to see exactly what happens here. And despite this money coming in, the prices were down over the week. And that's why you got to kind of read this, use this as tea leaves to know what's going to happen next week. So let's jump in and let's talk about the S&P 500 price to earnings growth ratio, the PEG ratio, one of my favorite ratios. And this is from Game of Trades. You can see here the PEG ratio is extremely elevated, and it's way more than it was during the dot-com bubble. Okay, now the blue line is the relative forward PE ratio. Gold is the actual PEG, and gray is recessions on this chart. And here we are. But the question is it justified? We know AI can make a company 3x more productive. Maybe the companies that are driving, the 7 companies that are driving these high PEG ratios, like NVIDIA's trading at PEGs through the roof, they're mind-blowing. But if they can just continue to grow for the next 8 years at 35% plus, which I believe they can, it's justified. Therefore, the PEG needs to be modified for those disruptive companies. So this is not all bad news, but part of this is why a huge amount of market players are short the S&P 500 because they think it's .com all over again, but they don't understand the disruption that's happening. Anywho, let's talk about the most expensive cities on Earth. Singapore, race to the top, is now the most expensive city in the world to live. And you can see where they were back in 2022. A lot lower. I think they were ranked number 4. Now they're top. Shanghai is number 2, Hong Kong number 3, London number 4, New York 5, etc. I think San Francisco used to be on the list. It's not anymore. And Tokyo is down the bottom. I remember as a kid, Tokyo was the most expensive place on Earth. That's funny how things change. But it's interesting as well that some of these top places are now becoming kind of crypto hubs. Singapore, Dubai, Hong Kong, etc. So hopefully that'll help them grow and make it cost effective to live there too. So let's switch gears to the ugly part of the news today. 2 ugly pieces. One is a lot of people, this is kind of counter to the last chart I shared regarding the PEG ratio. But this says, analysts believe earnings recession is over. Okay, now, even though leading economic indicators are showing signs of a recession, analysts are still revising earnings estimate upwards. This is similar to what happened in the lead up to the 2008 global financial crisis. That's a big, ugly, gray patch in the middle, and that big pink mark to show you The earnings pivot is front-running the weakening economic data. So the question is this time different? Is the earnings recession over? We know inflation actually drives up revenue and it also drives up profit. A lot of companies have taken the opportunity of the so-called recession, etc., to sadly lay off a lot of people. So they're making even more money than ever before. And yes, that's driving up earnings. The question is, will the actual recession that's coming, or it's here already in 18 states and it's here in Germany and other parts of the world, will that smash earnings? And the question is, can the earnings growth outstrip the recession before things turn around again? And I believe they typically can, because by the time you find out you're in a recession, you're already way out of it. And final slide of the day, and this is Disinflation Ahead. This is a negative reading on the Philadelphia Fed's manufacturing survey. By the way, the manufacturing surveys from all over the world, the PPIs, etc., are horrific. Whether you're looking at Germany or you name it, China, really, really bad. But the reason we care about this is it could be a sign of a disinflation. And this could bring about either, typically when you see this type of number here, either there's a massive economic slowdown in economic growth, or a decline in the demand for goods, or of course disinflation, all of which are bad. Okay, there's no good outcome here from this data. As a precursor to what's coming, the Fed just don't see it yet. You know, little guy on the internet like me can see it a mile away, but they can't. But hopefully they will before the 26th of July, next time they meet and next time they threaten to hike rates again. The damage is already done. So with that, everybody, big thank to everybody on Patreon. Thank you all for being here today. Sorry about a bit of a long show, but it was also a very exciting show because the market is unbelievable. And you can tell the market's getting good as well. A big thank you to nearly 2,700 people watching live. Bitcoin's still going up. It's only gone up $30 since I started, but everything else is popping. Wow. Yeah, Tesla's up $4 in after hours. It's all this disruption just keeps on going. So everybody, I urge you, this is a disruptive time in our lives. Be in disruption. Do not hold stodgy old stuff, which could even include things that you might believe are not stodgy, but they are. So thank you all for being here. I'll see you all tomorrow. Thanks to the mods in chat. Cat with K, I see you out there. And have a good night, everybody.